The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it's my pleasure to be here on this Monday the 5th. Monday the 5th of May. And within that context, I need to say thank you, Steve, for kicking us off here at TFNN with a great 2 hours. I come in at 11 o'clock. 11 o'clock, the sounds are coming out everywhere. Shouldn't be coming out. Let me just get rid of that. There it is, gone. And today I'll be filling in for Larry Pesavento up until the very last break. I won't be able to stay for that break. So until about 12:50 this morning, at least this afternoon, Eastern Time. And a couple of things that I need to just mention here. Yeah, I got quite a bunch of emails over the last couple of days, especially over the weekend, asking me about my my Outlook. Actually, a couple of people wanted me to do the Outlook in relation to other people's that they sent me. And I don't do that. I don't compare. What I do is what I do. And as a result, I tend not to say that I'm differing from anyone. If I do, I do. If I don't, I don't. It doesn't really bother me. I have to stick with my principles. And I need to do something right now. I need to show you the New York Stock Exchange, because that to me, with over 1,800 stocks, is really important. And what I discovered over the weekend was something that I missed on Friday because it happened after my show, I think. Most importantly, I look at weekly charts, and what I do is at the end of the week, I always show my subscribers the Dow daily, weekly, monthly. I like to put it into context, especially at the end of a month, which we had last week, and to put into the context of where we are, what I'm looking for, and what would need to happen for me to have an outlook that either becomes negative or more positive than I've been up until now. And in this particular instance, NYA.X, let me just get this right off. The New York Stock Exchange last week went to 10,676. The previous high was 10,000. This is a weekly chart I'm looking at here, so that's the context that I want you to see. The weekly chart had gone to 10,669, and that was back in, was that March or April? The week of April the 4th at 10,669. Because the New York Stock Exchange made a fractional new high, just 7 points in a 10,600 something dollar stock, index in this case, that makes no difference to me. All that it means is that no difference in the sense that it's such a small difference from the previous high. All that it means to me is that there's now a really good chance that the New York Stock Exchange, which was the laggard and is now the leader, can you believe the 1,800 stocks, 1,860, I think it is, I'm not sure exactly. These are now putting us together to make the New York Stock Exchange a leading indicator. And as such, having made a new high, it means that in the Chapman wave methodology, it's a very simple technique. It'll get complex if the New York Stock Exchange doesn't go higher than last week's high, instead plunges to the 10,180 level, down 500 or so points. But actually, what it does say is that there should be a leg D. And that beautiful up channel inside track that we're looking at says that if there is a rally, the best case I could see is 10,800 to 10,000, depends when, to 10,850. And then it bumps into very strong resistance. The MACD is crossing positive, not very strong, but is crossing positive. And that's the reason why I've been saying to subscribers, I see higher highs, but I don't actually see at this particular point a real breakout to the upside. I see a break to the upside, but a breakout in the sense that the Dow takes out the 10,680s or 10,720s and just continues straight up after that. No, I think it's going to be a very bumpy ride with higher highs and so far higher lows, but within the context of a slightly rising, let's call it moderately upgraded up channel. And that within May, you should see higher prices in the New York Stock Exchange. Let me put that into context now with the Dow. I'll just run the numbers. The Dow was down 130 points. It's now down 11. Oh, no, it's down 10. And the S&P was down 13. It's now down 80 cents. The composite index was down sharply. It's down 90 cents. So in the context of the bearishness that was imminent overnight and then into the early morning, what we've got are a number of signals that are saying there is internal strength. And that's one of the reasons for my subscribers to my opening call. We are just long. We have a particular short position which we hope to keep for a much longer period. But basically we are long. And we've been holding long positions, and we added to that today. Within that context, we're looking at gold because of the fear factor in the Ukraine, Russia-Ukraine. Gold spiked earlier. It's now up 8, but it was up quite a bit more. I like the action on a short-term basis in terms of that H that goes to an M-shaped pattern. In fact, what it really looks like here is that it's more likely that we are looking at, let me just see, 1077.40, 1075.80. Yes, it's more likely that we're looking at a rectangle formation with a series of arches going from an H, lowercase h, to an M pattern, with a very strong resistance of 1326 to 13, just above that high, 1332, 1335. That's the way I'm looking at it right now. Not to say that some of the gold stocks might not act quite nicely. Some have, some haven't. But that's what I'm looking at. So gold right now up 8 to 1310. Silver is, let's see, up 0.05. It's at 19.60. You've got high-grade copper down at $3, 3.06. Oh, I'm going to be watching this very closely. You've got bonds down 9/30 seconds at 135. That's going to be interesting. The TLT spiked to a higher high, which is either a G or a brand new B. So I will put it in here, G/B, because it's been a harbinger of safety lately. But it's the at U.S. currency, the continuous contract that is so interesting. And that is at an E. Let me see. This is at an E. The contract itself, the June contract, USM14, is also at E. And must check that out. So the last set was 135 and 10, 135 and 9, and that goes to a possible E/B. E/B, holding very nicely, stochastics at 84%. So bonds have held very well, but when I'm looking at, let me go to this, I don't think I put it, let me get this here, close this workspace. Look at this. Oh, I don't know if I updated it. Let me see if I did. I had a little bit of a problem over the weekend, but I managed to get around it, and I think, there we are. Long-term charts. Look at this. This is the yield. This is the 30-year yield, which went to a leg C. And that leg C could possibly make a trough C if this whole week the yield does not break underneath 3. Is that 2 or 3? That's 3.349. 3.349. That's 33.49. That was the low of the 30-year last week. That's the white one. The gold one went to a lower low. It's bouncing a little bit here. That's the 10-year note to yield. And here's the 5-year at a high level consolidation. If there's going to be an inversion a yield inversion. We're going to be watching this real closely because that, in fact, could set us off on the downward path in the stock market. Thus far, this is just where we've been many times over the past 4 or 5 years. So all I'm going to do is say, hey, watch it closely. That's it. Now, the iShares Global Timber Forestry ETF, which is trading at 5107, has so far held the up channel in the weekly chart. It's gone right to the inside track buy mode, the buy signal. So if it's rallying off here, it needs to be much stronger. But the HGX, the home builders, this is making yet another handle in this cup and handle formation. So that's the other thing we need to watch very closely. Why? Because if I look at Toll, and over the weekend I did quite a bit of work on a number of these home builders, I had in fact wanted to put in a buy on a couple of, or at least one, of the home builders, and then I decided I would wait the day. I wanted to see how the 9-period moving average held. So far it's held beautifully in Toll. I wanted to see it on Lennar, and that one was a little, that hasn't got there, but it's not acting great. It's acting okay. And a couple of the smaller home builders, and I'm going to be watching them closely. Can they bounce with rates low like this? I'd say they could, and they should. Whether they can is another thing, and the close today of many of the home builders is going to be very important. So I wanted to just cover a couple of things. The New York Stock Exchange making a new all-time high tells me that there's a really good chance that the Dow and the S&P, let me go to the front page that I usually show my subscribers. This is the 120-minute chart diamonds, almost tested the 200-period moving average after making the second arch formation at a peak D. That corresponds, look at this, here is the Dow chart. I do not have the notation. I lost that notation, but my subscribers, and subscribers, let me tell you, just to remind you, I do send these charts out over the weekend. Sometimes it's Saturday, sometimes it's Sunday, but I will be sending them out every weekend and then repeat it again on Sunday. That's the Dow weekly, monthly, if that's what's needed, and anything of pertinence that I think is a market instrument that you could study a little bit, in your spare time. This light blue or green line that I've got here, that is going to be very interesting, because if in fact we've held that support, even though it's gone below, it means two things. It means, number one, that at 9-period exponential moving average of 16,490, I think it is, has become again a tremendous support, but we haven't closed there. So an hour and a half into the day, not even 2 hours, not even 2 hours into the session. I don't want to give a prediction on the day other than to say nice bounce back above the 9-period moving average. Let's see if it holds. And the second thing about it is that there's I haven't changed it now, a right side price time match, and I'll draw that in during the break, because I had these charts had to get changed over the weekend. I'll make a little notation here. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We're back. Dow's down 8, S&P's unch. Now, what's interesting, if you look at this particular quintile over here, I've got 5 different segments. In this one, what I drawn, I took it came off. I'll put it back on. I just want to put it there. It's what I had drawn was the pattern that seemed to have been quite obvious, and I do this in my work a lot. I'm going to open this up, and I'm going to show you that there it is, that in this particular chart of the 120-minute Dow and the 120-minute volatility index, the mirror image often gives a great amount of information that can tell you whether or not you're getting the inward and outward reflection of the Dow going lower and the VIX going higher, or vice versa. And what I'd said, there's a good chance that we would try to test this trend line here, and that 16,366 is a 200-period moving average at this particular point. That's number one. Number two is the VIX spiked today all the way to 14.20, and now it's back down to 13.36. That is a very big reversal, and in a sense says maybe we're not yet ready to go down much more than we did today. We'll see. It's just early in the day. And I've got a number of indicators, and one of the indicators that flashed is that my Chapman Wave Trin Index, my Trin gauge, flashed a signal to say there should be much earlier, flashed a signal to say that within 1 to 2 days, there should be a sudden move of between 7 and 9 points in the E-mini futures, which should be reflected in the Dow. Now, I'm not sure whether we've just had it and it's done, that's it, or whether it's still to come, but it's certainly, we came off 12 points 13 points off the low of the day in the S&P. That is big. Let's go to Scott in Safety Harbor. Scott, how are you?
Fantastic, Basil. I have been using $100,000 from a relative for the past month, and I've only got one more week with the money. So I really need to make some moves here in this next week. What are you looking at for this next week?
Okay, now two things, Scott. The market has no idea whether you have a time limit or whether you have no time limit. That's number one. Number two, I have found over all the years that I've been trading that if I say either one of two things, I've got to make up something that I lost, or I've got to get this done by a certain time, I've put pressure on myself to do something that the market, well, let's put it this way. I believe very strongly in the trading gods, the lowercase t, the lowercase g, and all that is that other little person sitting on your shoulder, wagging the finger saying, no, 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 you shouldn't have done that. So let's do this. First of all, because you've got $100,000 and you've got the entire week, I'm going to say don't use more than 35 to 50 grand of potential trading money. And I'll explain to you why. Because if you use that and you use it really well, you can do very nicely. If you use up the entire 80 to 100 grand and it starts to go wrong, you've got double pressure. Not only do you have a time limit, now you've got price to catch up. So let's just clear the mind, start absolutely fresh. So what I'm going to say to you is this. In the positions that you take, and the positions that you take for, let's call it a trade, because that's all you're going to be doing right now. You're not getting into any long-term position. Are you able to go short? Are you able to stay long? What can you do?
I need to be out. I mean, I've done this before over the last 2 or 3 years, and the only reason they keep giving me the money, and
because you're doing okay.
Really nothing on it. Really, they charge me $1,000 for 2 months. And I always give it back when I say I'm going to, and the entire amount. Even if I'm in the rears, I will take money, out of my own pocket, whatever. They get their $100,000.
All right,
so it's worked out nicely. So
fine. So now
can't go long.
Okay, but you can go short or you cannot go short.
Yes.
Okay, so yeah, this is what I'm thinking. Good. I'm pleased that you explained that to me because that immediately alleviates some of the pressure because you've done it many times before, you've done it successfully. So I'm still going to say in this particular kind of a market, I probably would keep my stops fairly tight. That's number one. And number two is I would probably say to you only add on strength if it's on the upside and add on in the short position if it's on the downside. So we've got a bit of a break coming up here. I'm going to do two things. I'm going to look at certain stocks that I think are possible trades, but you have asked me about home builders. Is that correct?
Well, the inventory is just, you can go around the Tampa Bay area and the inventory is really zero.
Okay,
so
fine. Okay, we've got the break. Okay, I'll be right back with Scott in Safety Harbor, and then after that we'll get to Patton.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour, and we're on with Scott in Safety Harbor. And Scott was talking about looking at the home builders. Scott, this is what I'm thinking here. I think you've been watching very closely the home builders. I think you have a certain a feel for what's going on.
Well, the only thing is, Basil, I mean, I only really know about, Florida in our area.
Correct.
What could be going on? Atlanta could be dead. Who knows? I don't know.
Right. So what I have two questions for you. Number one is, are there any specific stocks that you're looking at?
No, not really. I'm mostly into the XLF and
you're into the ETF type.
I'm really not into the home builders ever, but it's just become so glaring in the real world that which is really what stocks are about, that I can't help but look over the fence and try to see what's going on,
Okay, so here's my recommendation. I'm not telling you that this is a good time just to jump in and do what I'm recommending. So I'm only throwing it out as a suggestion for you to look at, because I want you to feel comfortable. But if you're looking at, for instance, the XLB, I'm sure you look at the Material Spider, the XLB. That's behaving just a little bit better than the other areas in the home builders, in the sense that the others have had quite a deep pullback. The XLB has had a pullback, but at this point it isn't that deep. I had drawn in a little while back what I call it's it's a diamond formation. And the diamond formation in the XLB weekly chart suggests that there could be a rally from the 47.66 area to potentially a new recovery high. And the new recovery high would be just above 48.34. So it's not that much in terms of points, but it is something that says if the home builders are going to continue strengthening, then probably the materials area should, in fact, also be participating. And so far, the chart formation, especially with the XLF monthly, having a high-level consolidation, that's the type of thing I'd be looking at. The other thing is that some of the biotech area have been, some of them, for instance, like Gilead Pharmaceuticals, Gilead Sciences. That's a stock that I still need to see a leg D. It's a 79.11. The weekly chart is acting very well. It's one of the better acting of all the biotechs. It's had a very mild pullback. It's about 2/3 back from its all-time high to the most recent low. So I'd be looking at something like that, something that's an area that's already been badly hit.
The only thing about the biotechs is, unlike the materials, the biotechs, something can come up or it be in the room right now, and when that door is open, it's like, wow, they just had bad reviews on this, they had that.
You're absolutely correct.
20,000 people died and they didn't tell us about it. Whereas the materials is just like they are materials. They're kind of rock solid, and if there is a move, it's a slow move. It's like the ground moving, And
well, all right,
not only the real estate with the materials, but I feel like, Home Depot and so forth, people it's summertime. They're getting into some projects, and they need materials for those projects.
I'm actually a little disappointed in the action of Home Depot, and I'm not sure why.
It's been really disappointing, and I actually went to 4 stores over the weekend for that purpose, and I didn't really see much activity. But
me too. I did the same thing. I went there to go and get some.
I went, and the wife was happy about this. I took her to 4 different shopping malls. We could not get a parking space at any of them.
All right, so I had exactly the same experience. Parking, a shopping mall, and a Home Depot. And I have to tell you something. You've made some very, you've got some really good, you've got some very good points. So I'm going to suggest something like the XLB, and then look for an area in the material sector that is acting well. And I suspect that you'll have a good chance this week to at least play some upside potential. And as you say, unlike a biotech, although I think the biotechs have a little way to go on the upside right here, it's something you're more comfortable. So I would stay in that area. And in terms of the builders, there are a couple of the lower priced home builders that are actually doing very nicely. I'd look at the not the Tolls and the Lennars. I'd look at the ones that have been lagging, and they are looking quite good today. So that's going to be my recommendation, Scott.
Name a couple at the low end that you like.
Well, I think, the Hovnanian, BZH, there are a couple there. There are lower prices. I would not put a huge amount of money in. If you make a good percentage on a small stock, go for a small amount of money.
I like the Hovnanian play. When I first called you, I didn't want to mention it, but that's what I had in my mind, the Hovnanian, and I'm with you on the Toll Brothers and stuff. I think that even though the market's up, still getting a loan right now is near impossible, and those would be jumbo loans on the Toll and all that. So the Hovnanian definitely is.
And not only that,
correct.
If you're going to Hovnanian, you've got to realize it's an H pattern that has the potential for an M. So it needs to move fairly quickly, and it needs to get. It's at 460. It needs to get to 468, 472. Within about 2 days, and then you'll know you're okay. I would not give it any room on the downside, and I would not put a huge amount of money. I treat it as the starter of the week to see if I'm able to build some confidence. That's my idea of using that money in a cogent way so that you can sleep at night. You've got a lot of comfortability. Okay?
Thank you, Basil.
Good luck, and thank you for calling, Scott, and tell me how it worked out. I'll be back and I'm going right to Pat in Dennis, Massachusetts. Hi, Pat, how are you?
Hi, Basil. Nice to talk to you.
Nice to speak with you.
Has anyone called you about that huge home sale in New York?
They didn't have to call me because I saw it go by and I said, I just spoken about this on Friday. But you know, Pat, this is nothing. 147 million or whatever. Hey, this is like pocket money for a lot of these guys. I'm not talking about anything like that. I'm talking about something that is just so bizarre and so expensive that it just knocks your socks off. But yes, I did. So, folks, was that in Long Island?
Barry Rosenstein bought a 18-acre beachfront home in the Hamptons.
Nice, a little beachfront home. Yep, we're getting there, Pat. But we're not even close.
Not quite, huh?
No, not even close.
147 million doesn't do it. Huh?
147 million. Yeah, I mean, this is lunch money. What are you talking about?
this just beat out a house that sold a couple of weeks earlier for 120 million.
Well, 120 something, right? Now the race is on, and this is going towards my skyscraper theory. So I'm calling it my skyscraper theory. It isn't really. It was someone wrote about it in the 1950s. I didn't know about that until way after I started talking about it. I believe that we're going to just be stunned at, first of all, the amount of money that someone is going to put into something that just a few years ago would have been for about a tenth of the price. And that's number one. And number two, it is so excessive what they're going to do. And my suspicion is that they will knock down the 147 million house. And just like some guy up the street here knocked down this house that I thought was a mansion, but it turns out that it's not a mansion because someone just built what looks like a hotel.
Oh, geez.
In fact, I thought it was even extended. I thought they had this huge drive-in cinema, but it was the plastic wrap on the huge chimneys that they covered in plastic while they were busy working on this inside on the scaffold. So that's what I'm talking about. I'm talking about stuff that is beyond comprehension, and I suspect that we will get that, and it'll be in the United States, and it'll be a building. It'll be a skyscraper, and they'll be talking about, I don't know if they're talking about a mile-high building, but they'll be talking about the title in March of a popular science magazine was World's Tallest Building. I think it was 6 Dearborn, Chicago, and then they had to about 3-4 times over the next 10 years. They kept trying to rebuild, and then eventually they did come up with something which I haven't seen. I should check on it, but they have a very tall building going up in Chicago. But I'm suspecting that it's going to be it's going to be a building that uses every bit of technology, which means in about another couple of months, I'll start doing my research on Otis Elevator, because back in 1929, the reason why you could build the tall buildings and you could build the Empire State Building was only because just as Apple could not build this incredible device, so tiny, so small, that can do so many things, and so beautiful without the Gorilla type glass, all these different speakers that you could hear, microphones that were small enough. So they could not build the tall buildings until a company like Otis Elevator developed the elevators that could go to the very top of the buildings that were being projected, and that made the difference. So
yeah, I read that. They were showing this morning, it was kind of interesting, they were showing on TV this morning that these high-end realtors that market these properties, that they're actually having movie trailers made. They're hiring people to come in and make this whole film with characters and everything, showcasing everything on the property that they're selling.
I must tell you that I keep up with real estate all the time, and I am really impressed with the technology that can literally, you could be sitting in your wherever it is, thousands of miles away, and you can do this video tour and all, and you can read up about every single thing about the pothole down 30 feet away from the curb. It's I love that, but what you're talking about now, that is exactly the excessivity that I was speaking about back in the late 1980s. And I'm now convinced that we are going into this hyper phase, and it's going to be a remarkable phase, because I usually, when I'm talking to people and we're looking at what kids have, talking about what kids have today, it's not just the kids, it's the adults as well. This is the most, I use it, it's not a pejorative word, I'm just trying to find a better word for it, but it's the most spoiled society we've ever had in the history of mankind. But the children today are probably the most spoiled. Now, that's not really the word, because you don't have to have a spoiled child who has quite a bunch of things. So that's not really the word. It's the most, I'm not sure what the word is, but young people, little ones today, there's another one, Jane the Dance is entitled. In a sense, us older folks can look and say entitled, but when you are that age and it's available, you just get it. So I don't know about entitled. There's a word. I'll think of a word for it. It'll be the right word, but I can't.
I'll work on it too. Well, I'm dying to see what property meets your specifications if this one doesn't do it.
Well, it's not going to be.
$147 million would do it, but it.
No, Pat, that's just the start. Not only is it the start, it's something that you and I could never, with everything that we know, we couldn't even imagine what someone would be wanting in the building that we're talking about, because it'll be very creative. It'll be so excessive. And, just think of the houses in Newport. At the time that they were built in the 1890 period, that was they call them the robber barons, but these were the moguls of industry of newspapers and steel. And those little, they call them cottages. Well, a 23-room or a 40-room cottage, that's just, there's a word for it. I can't think of it right now. When you place something down on the other end, you make it sound so modest, but in fact it's the most egregiously excessive thing. Well, they brought in tiles for the piazza from Italy. They brought in Spanish, whatever it was. They brought in marble from, wherever they could find it. So we're talking about something that is going to just knock your folks. Now, my engineer said, younger folks expect instant gratification. That is part of what we're doing now. This instant, it isn't just young kids, it's everybody. I mean, I'm impatient. I'm trying to get some information. I don't want to hang around. 2 seconds. Do you realize we used to get that little bubble, that the little hourglass that used to pop up for almost every single thing we did on the internet? Now you never get it, but if you do get a delay, it's like you are waiting forever, but it's only 3 seconds.
Right.
So,
absolutely right.
But all I can say is we will recognize that we're getting there when it happens. At this particular point, we've got the starter with the 124 and now 147 million in the Hamptons. We'll see what happens. So thanks so much for calling, Pat, and bringing that up.
Oh, nice to talk to you as always, Basil. Bye.
Bye. So we'll be back, folks. Let's see. I always look around for my clock. My clock is not there. So we've got another segment coming on. Then I'm going to do Larry's show, and I'm doing Larry's show right up until 12:50. So I'll be back straight off this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 2, S&P's up 0.63, and we've got a question that's in about BIB. BIB is the ProShares Ultra NASDAQ Biotech, so it's basically the IBB, but it doesn't really trade always at 200%. For instance, the IBB is up 2.88 right now, up 1.26%, and this is up 2.32%. 2.3, 2.4. Yeah, so it's a little different, up 1.72. So the BIB at this particular point from the 120-minute chart is attempting to get to a leg C above 77.86. We were long this. We took a little bit of a profit this morning. Probably should have just held on. I just didn't want to take a loss if it was in a pullback more. It was in the area of having had a tremendous gain and really struggling to push above the previous high. But I do like it, and that's the reason why had brought it up when I was speaking with Scott earlier on about the biotechs having a counter-trend rally. They've been beaten down. They deserve a rally, and that to me is the rotational aspect of what can hoist this market, buoy it to the upside. So I love it. I love it. I like the H pattern that only went down a little bit more than 50% and then sprang back. I like this. I think it's going to go higher. My suspicion is that the BIB is going to attempt to tackle the 77.86 high that we made on the 1st of May. And if it does that, the big thing is, can it close above 78.19? That was the high of the 22nd, I think it was, 23rd. And if it does that, it says, good. Now you've got a little bit more strength. That's going to be leg B in the weekly chart, and now it says that inverted candle, that Roman candle from the weekly candle of the 4th of April with a high of 86.20, well, that candle with a low of 71.40, the wick is going to be very interesting because it says that there's a chance that if it can test right there, 81.20, there's a good chance it's going to go higher. I don't know if it can go to 86, but if it goes to 81.20, I suspect that 6 points higher, they can go a little higher than that. But that would be the way I'd look at it. Look at that candle. Right? Oh, yeah. A lot is going to be dependent on breaking 78.90. It's at 76 right now, up $1.96. It should be able to do that this week, especially if the market, as I suspect, is going to go higher. And I'm anticipating, yes, so that was the answer. And where would I say you got to be? If it takes out today's low, forget it. It's going down. I don't think it's going to take down. I think this is the weekly low. That's what that's what I'm thinking. So S&P in the den. That's what I'm looking at that. So a quick couple of questions here. So Steve Rhodes says, perhaps the housing cycle you're looking for completes when David Siegel completes his house in Orlando. It's the 90,000 square foot house he began years ago, and after the real estate crash had to pull in the reins. He's the timeshare king and he's back to building it again. Wow, 90,000 square feet. Wow. You could have an entire city living in there. All right, I don't know. We're going to be watching it. No, I think it's going to be something that I'm not looking for the single family house. It's going to be the house that tells me that we're getting close to the skyscraper. It has to be a skyscraper as far as I'm concerned. And it has to be not necessarily a skyscraper, the world's tallest building, although that's usually what's announced. It has to be just a project. But I remember when they announced those 5,000 passenger cruise ships, and I spoke about a major top coming at that time, and we certainly did have a major top. That was for 92, I think it was. Anyway, so we've got a break coming up, and I'm going to go into quite a bit more detail. I want to look at the transportation. I want to look at the currencies. I'll do that in Larry's show. And so I'll be back for another hour, 50 minutes straight after this. Stay tuned. Basil Chapman signing off for this hour, my Tiger Technicians hour. Don't forget, go to the front page, check out my opening call. It's my daily newsletter. I'll be back.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN,